So today we are talking about mortgage interest rates, right? Housing market in general is a hot topic. It's trending, it's cool, it's hip, it's awesome, right? Everyone's talking about it for a reason. And one of the biggest thing that determines the direction that goes and the decisions that you make as buyers and as homeowners is the interest rate, what you are going to be paying to purchase that home. So Chris, the lending expert, wizard of all wizards, is here to enlighten us. I deliberately don't learn anything about lending because whenever I do, it friggin' changes like 5 minutes later. But this is the number one question that I'm asked. So Chris is here to share his insights. Take it away.
Yes, so Chris Handy, been in the lending business for over 15 years. Got in right before the housing crash of 2008.
So timing is your thing.
Timing is my thing.
Good.
Perfect
It's a gift.
timing.
It's a gift.
I've seen a lot of different markets. I've really taken a deep dive into all different loan programs, credit scenarios. So have a lot of experience to help you navigate this changing, ever-changing market.
I know, and I've seen it, and I've seen it with clients who've been told no, they can't get approved with any lender. He pulls a rabbit out of his hat. Not literally, if you ask me for him to do that. But Kim clearly said he can pull a rabbit. As realtors, we actually get asked a lot. Probably one of the top questions that we get asked actually is, what are rates doing? Are rates staying this low? Why are they increasing? And I usually just send them to Chris, but I thought we'd do a video to answer everyone's questions all at once. So Chris, you tell us, what is the market doing? What's lending looking like?
Yeah, great question. So as of today, April 13th, 2022, interest rates, the national average ticked in at 5.138%. 6 months ago, you would have seen an interest rate, at 3%, just below or above. What it does is it really changes the financial scenario for a lot of people's new purchase.
So when someone's approved for an amount, they're kind of approved for a payment amount, right?
Mm-hmm.
So for example, if somebody 6 months ago was approved because of the payment, with the change in interest rate, how does that change their approval limit?
So for example, on a $400,000 loan amount, if you're looking at a loan with a 3.125% compared to a 5.125% that you're more likely to see now, you're going to see that that's going to impact a buyer's payment by about $465. Where the payment has gone up, comparatively by $465, you see that has, in that scenario, has around a $90,000 impact in a person's ability to purchase.
Yeah, wow. Which is hard because home prices are going up, interest rates are going up. What do you see happening? What do you see as far as moving forward with interest rates, with lending?
Yeah, it's nobody has the crystal ball with interest rates. They're more likely, it looks like, to go up looking forward before they come down, but nobody really knows.
Well, and the scary thing is home prices have gone up 27%. The national average inflation is 8%, and then the national pay rate increase is still what 1.5% or something. Everyone's being priced out of the market. Nobody can afford it. People can barely afford it now. I can't imagine now that interest rates are rising. So that's one thing that I'm running into a lot. I mean, I it's the American dream. Everyone wants to own a home, but I feel like the number one question I'm asked for people that want to buy a home, that's their goal, but they're seeing a hurdle, is how realistically can I afford this, right? I've had some clients, bless their souls, who've been looking for 2-3 years, and back then they're like, oh, I'm gonna wait, it's gonna calm down, and now house prices are doubled, and now what they're qualified for, you literally cannot find a property.
That's a tough problem to solve. Unfortunately, the reality is some first-time home buyers and home shoppers are unfortunately priced out of the market.
What do you do? So say, for example, somebody's approved in Davis County for $250,000 and they cannot find it. What's the solution then?
One of the things you can do to put yourself in a stronger position to buy right now is to lower your credit liabilities. Pay down your credit cards, pay off a car. The monthly payments that you have that report to credit are factored into your debt to income ratio. So if you can lower some of those debt obligations, it's going to put you in a stronger position to buy.
Meaning you'll be approved for more.
Correct.
Right?
Yeah.
So if I pay off my $500 a month car payment, then I'll be able to have a higher monthly mortgage payment, so I'm approved for a higher. Is that what you're saying?
That's likely, yeah.
So basically people can pay down or restructure their debts, right, is one way to get approved for more. Another solution that a lot of people have is what do they call it, multi-generational housing, right? So client and her husband and their 2 kids are going to move in, and her mom and dad are going to move in too and live in the basement or whatever. They're going to share that. How does that work? I understand it from a renting perspective. How does that work on a lending perspective? How would that help? How would that?
Well, in a scenario like that where you have multiple borrowers, you potentially have multiple streams of income from each of those borrowers that can help. That can come in and help with the qualification. Many people don't know this, but there are also loan programs where you can have a non-occupying cosigner be on the loan with you.
Oh.
So, let's say it's a parent or a grandparent. They don't necessarily have to move into the home with you. They can be a non-occupying co-borrower to, again, help strengthen or, strengthen assets or resources, provide more income
Okay.
to help you qualify.
So my mom, who lived with my dad in their house or whatever, she can co-sign and they'll use her credit and income and I can get approved.
Yes.
With her giving a pinky promise?
That's it. Yes, and this is,
Mom, you're the best. That's really cool because, okay, this is so fun. See, I learned so much whenever I talked to Christopher. Okay, what else? Tell us other cool stuff.
Well, many people that have these thoughts that the housing market will crash. There's this idea that you can time the market. And we work in this every day as real estate agents, mortgage professionals. I mean, we can tell you, we can't predict anything that's going to happen to the market from one year to the next.
If anyone says they know what's going to happen with the housing market, I don't care who they know or whose sister works in what company and they heard the inside track on what. Nobody knows anything ever.
I think what we can see though, is, and you'd agree, is you've owned your home and helped people invest in homes. What matters more than timing the market is actually time in the market. So once you own a home, the longer you own that home, historically, you're going to see that the property is going to appreciate, going to help you build equity and generational wealth looking forward. It is key in this market to, get your team. And by your team, I mean, your trusted real estate agent, your trusted lender, and work together to put a strategy in place of how to be able to purchase a home and win in this market. If you can buy in this market with interest rates high, there will be opportunities, most likely opportunities where interest rates can come lower and you can lower that financial obligation, but you will benefit from buying a home sooner than later based on appreciation rates and being able to build equity. For most people, you're going to be able to build more equity in your home compared to your savings rate of what you can do each month.
There's a lot of people that are, first-time home buyers or haven't bought a home in many decades or whatever. And when I talk to people, it's funny. I had one lady who called me and she's like, yeah, I was approved, but the interest rate was bulk. I'm just going to wait. It was 5.1%. And I'm like, you should be on your knees thanking the almighty heavens above. And so we just going to go over historically what lending rates are. What do you think they're going to stabilize at?
If you look just at the last couple of years, a 5 to 6% interest rate, that seems like a higher interest rate. Interest rates are always changing and evolving. Day in, day out, week in, week out, year in, year out, interest rates are adjusting higher or lower. If you take a longer look at what's happened in the market, there has been times in our market that interest rates have ranged from 12 to 18% to buy a home. So comparatively there, a 5 to 6% interest rate is phenomenal. You thank your stars that you're able to secure that interest rate. We have no control over where interest rates go, but what we can control is our financial scenario and putting us in the best position possible to be able to buy in the present market.
Chris.
Yeah.
Oh, enlightened one on mortgage lending. So if you were to leave thoughts or tidbits with people, because the one thought that I want to leave is if you're thinking about buying, there's a million factors to consider. Again, disclaimer, hashtags, asterisks, warning. But the number one thing I would look at is your longevity. If you're planning on staying 5 years or longer, I would say buy now because it doesn't matter what happens. Because really the next 24 months is like throwing spaghetti at the wall, just seeing what's going to happen. Nobody really knows. So that's my tip. What's your, do you have a farewell tip for everyone?
My farewell tip would be, for most people, if your goal is to own a home, find the team you trust. Find that agent that you trust, find the lender that you trust. And, the only way to know what's happening in your scenario is to actually take a full look at where you're at now and what you need to do to get where you want to be. So find those that you trust and
yeah. Oh, I wish we had like a DJ. It could be like, oh, you got a problem? Yeah, I'll solve it. So if you are nervous about buying in this crazy market, or if you're worried about interest rates, lending, anything mortgage related, he's your guy. So what is the best way to get in contact with you to get all of your mortgage lending questions answered?
Oh, thanks for asking. To get in touch with me, please look in the description below. All my contact information will be in there. My company, we're licensed in 31 different states, so likely we're going to be able to help
And
you.
he's
when
going to
you're
list them
looking.
all alphabetically in 60 seconds. On your marks, get set. Like and subscribe to learn more, anything real estate related. We've got you. And until next time, stay sweet. What do they say in your books? Chris, very seriously, I joke around a lot, but I really appreciate you being here. I'm going to have him back for a couple of questions and things. Actually, leave a message or comment below and tell us what lending questions or what mortgage or real estate related questions you have. I feel like there's always a million of them that I don't think of until later. So message us. Can we do this next week? Can we do this next week?
Let's plan on it.
Yeah, so message us and we will collaborate all of them. The best questions get answered on the video.